Welcome to Trading Lounge and the European indices. We'll be looking at the DAX and the AEX and the FTSE, and starting with the DAX here on the monthly chart. We're looking at wave 3 here, and then an A wave and a B wave and a C wave here. And you might think that this is wave 1 up to here and wave 2 back down to here, but on the S&P 500, which the DAX pretty much tracks, is that this move down through here for the US markets came below this one here. So we need to look at it as wave 3 here, wave 4 here, and then looking for 5 waves up of primary degree to make this larger wave 5 here. So it's very clear that we've got wave 1 and 2 here, and then we've got a nice strong third wave with 5 waves in it as 1 and 2 and 3 and 4 and 5, and then an A and a B and a C for wave 4 here, and then we're looking at 5 waves in this last leg here. And within this leg here, we're looking for 5 waves, as you know, so I'll just go to the weekly chart and pick up that wave 4 low here. So on the weekly chart here, we just straighten this up a little bit. So wave 4 here, and then we're looking for wave 1 and 2, which we have, of course, and then we're looking for wave 3 here, and we're looking for 5 waves of 1 lesser degree, so we can look at it as minor 1 and 2 and 3 and 4 and 5 here for intermediate wave 3. Once this is completed here, and this is what I'd like to talk about today, because it's possible that we do have a top in play, and then wave 4 here, and then wave 5 coming up through here. Normally, if wave 1 and 2 if wave 2 is simple, then wave 4 will be complex. Wave 4 also pulls back. We can look at it in 2 ways, from wave 2 here to the top of wave 3 here, which I'll just pop that on this current top here. So we can look at it pulling back to the 38.2% retracement level, or the wave 4 of 1 lesser degree. In this case here, it's pretty much the same. Normally they're pretty similar anyway. They'll just be out a wee bit, So the other thing here that we can consider as well is the trading levels. This is what these orange lines are here, and these are major trading levels. So normally at a level here, in this case here, the most common pattern is the classic trading levels pattern, where we have the move up, which is this one here, and it's normally wave 3 that sits on the level. Then wave 4 coming back and wave 5 up. So it's the arrival, the reaction, and the first high above the level, and then the corrective pattern. This is the basic psychology that happens around a level, be it at this degree of structure or be it at a minuscule degree of structure. It's the way that the market navigates price, becoming from resistance and sorting itself out to becoming support. Now, this is the most common pattern. There's a variation on this pattern, and then there's the overshoot pattern, which I'm not going to get into today, because I know that we're looking at this classic trading levels pattern here, the classic pattern 1. So we'll be looking for, in this, from wave 4 here to wave 5 up here. In most of the European markets, we're looking from wave 4 to wave 5 and looking for 5 waves in there. So we'll move into the daily chart next here, and I can just put this on to 200 here. So from this wave 4 here that we're looking at, we're looking for 5 waves up here. And as you can see, we're pretty much done most of that, if not completed. This is what we need to talk about today. So we're looking at this move up through here. I do want to say here that if I've made a mistake, the mistake that I would be making would be having wave 3 here and wave 5 to go one more leg up here, and we'll look at a wave 4 here, then a wave 5 up here. So the possibility that I've made a mistake is real. We all make them, of course. So the mistake that I would be making would be, just if I can copy this, would be looking at I'll just put this in the alternative count color, which is grey, and I'll just save that. So it is possible that that can be a wave 3 there. I won't go into that at the moment, but even if we do have a wave 4 top in, wave 3 top in here, or wave 5. Even if it's a wave 3, we're still going to pull back to the wave 4 of 1 less degree. So we're going to be testing the 13,000 again here as such. So our main job at this point really was from this, excuse me, from this wave 4 here up to this wave 5 here. We were looking, or wave 3 here, we're looking for 5 waves in here, okay? So if we go into the 4-hour chart, we're just sort of drilling down into this. So being this wave 4 here, we were looking for 5 waves up through here. And, you know, it's not, you know, sometimes Elliott wave can be just perfect and it's a beautiful picture and everything fits nicely and so on, and sometimes it doesn't, you know, finish the way that we want it to, for example. But we were looking at wave 1 here and wave 2, then the 3rd wave moving up here, and then we're looking for a 5th wave to move up. So we did move up, and we did move up above the top of the 3rd wave here, but not very far, you know. So it's like we've got this. It's possible that we've got a top in here, okay, of this degree of structure that I was talking about before, of the intermediate degree. So that is possible. So we need to confirm that first, and one way of confirming that, getting the evidence for that, is actually looking at a 5-wave structure to the downside here as an impulse wave. And once we've got the impulse wave in, then we would need to see a corrective ABC pattern back up, and then we can look to short through that space here, because there's, you know, getting this 5 waves here. I mean, one of the things that sort of, there's some possibilities here that we need to knock out, and one of them is that it's possible to have wave 3 here and wave 4 over here, and then looking for wave 5 up here. That's a possibility, but I'm not that keen on that because the wave 4 here, if I took this as wave 2 here, and even if I took the low end of wave 3 here, the 38.2% retracement level is just in here. It is a bit, so it's dropped quite low for that, you know, down into the sort of 50% area. Not that that's a big deal, but it's an extra 10% of that structure. So it sort of doesn't rule it out, but it puts it puts it in the unlikely box, okay? But it's possible. It's possible that this could be a wave 4, okay? Yeah, and also the other point too, in a lot of the markets, this 5th wave up here doesn't finish very nicely either, and it's also possible to have wave 3 here, which I always preferred, but I'll just leave it like that for the time being. So what we're going to try and do now is we're going to drill in here further, but yeah, there can be a change in trend now. It's not that we need to sort of do anything at this point. We need to gather the evidence, and once we've got the evidence, then we need to look for trade setups in this scenario. So going into the hourly chart here and drilling in, it's possible to also have wave 3 here and wave 4 here and then wave 5 here. It's just that the thing I don't like about this, it makes wave 5 really quite small here in this instance, you know, compared to wave 1 and the length of wave 3 here. Also too, the move that's down here at the moment, we've only got 3 waves down. We've got this move, and this move here. So we would still need to see a wave 4, and then we would need to see a wave 5 move down through here as well. This 5 waves here would be helpful to determine that, because we get 5 waves here, then we'll get an A and a B and a C pulling back up 50-60%, and then moving down. So, you know, getting in here now on the short side is not going to be of any use to us, because we would only, after this 5-wave structure, would only see a bounce anyway. So we could draw a line through there, or taking this low out here would be acceptable for the next short. We should be able to get a better position than this, but I'm just sketching out the main sort of drift with it all at this stage. From this area here, we can go into the tick chart here and just have a look at this as well. So from the top, so that's the top here, okay, so this fifth wave area, if that is the fifth wave here. So currently the move down through here, a little bit tricky to follow. I'll do my best with it. We've got 1, 2, 3, 4, 5 for wave 1, an A and a B and a C for wave 2, 1, 2, 3, 4 and 5 for the third, the fourth, and then we've got the fifth all the way down to here. Now, we can call that wave 1 or wave A here, or B and wave 2 here, and then we have the 5 waves down here. We've got 1 and 2 and 3 and 4 and 5 for 1 and 2, and then 1 and 2 and 3 and 4 and 5 for the third wave, A, B, C for the fourth wave, and then we've got the fifth wave down through to here. So at this point here, we can have it as, this is 100 ticks, this chart, so we can have it as an A wave here and a B wave here, then 1 and 2, and then 3, 4 and 5 here for the C wave here for wave 4, which is roughly the 38.2% retracement level. This is the wave 4 of 1 lesser degree here. So if I just grab this retracement tool here and place this down here, we can see that 38.2% retracement levels here, but the wave 4 of 1 lesser degree is up here. So we need to grab that. So anywhere in this space here, then we can also gravitate towards the closest largest number here as well, and look at that space. So I've got this as an A and a B and a C here for the time being, but I've also got wave 4 over here as well. So it's also possible to have this as the B wave here and the C wave over here and the A wave here. So I'm just going to configure that text here and dull that out here, because this is more likely the case here. So we can look for a little 5 wave structure up to this point here, but I could say that if we get a nice tested support on 13,400, then we can start looking on the long side. So from here, we'd be looking, I have to draw on this side of the price, unfortunately, but we'd be looking for 1 and 2 and 3 and 4 and 5. So we'd expect the market to fail at this point here, but and then wave C should be roughly the same length as A here, and then drop at this point. But if we find support, if you see support on 30,400, then you need to sort of start looking for a long trade setup. But you would also need to find the right setup here. So the classic trading level setup, as you know, would be coming up here. I need to draw on this side, so it would be the arrival, the reaction, the first high above the level, and then you'd see an A and a B and a C correction here. So what you need to wait for is you need to wait for the arrival, the reaction, the first high above the level. Put your first thing across the top here. You can drop it down to this one here, and then that would be your setup to go long at that point. Okay, you do need to wait for that, because that really helps confirm. Yeah, here, so same as here. So we've got the arrival, the reaction, 5 waves up here for the first high above the level, and then we've got the move down. So this would have been the trigger point here, and then we can drop it down to this one here. But in this case, it never came back up there. You know what I mean? So so just that little pattern, that's the classic trading level pattern. It keeps you safe. It works most of the time. And it's worth you can work. It helps with the Elliott wave, put it that way. So it helps. The trading levels will strengthen the Elliott wave concept, and the classic trading levels pattern 1 and 2 and the overshoot pattern will work with Elliott as well and help strengthen that up as well. So they're great tools to use with Elliott. Anyway, the main point here is that if we get 1, 2, 3, 4, 5 down to here, then we're going to get an A wave, a B wave, and a C wave back up to this space here. And then we need to see if that's going to be corrective. So if we can confirm that this is 5 waves and this is 3 waves here, then we can start looking at a turn in the market, and we can start looking at being short. This is the same for the AEX as well, so I can just bring up that, just cutting to the daily chart here, but wave 3, an A and a B and a C here for wave 4, and once again we're looking for 5 waves up here. So once again we're looking from wave 4 here, we're looking for wave 5 up here, we're looking for 5 waves up there, and once again it doesn't finish very well either here. So from wave 4 here, we're looking at wave 1 and 2 here, and wave 3 here, and then an A and a B and a C for wave 4 here. But I don't really have, it doesn't really count very nicely in here for 5 waves. I could squeeze it in, but it actually counts better if I can copy that as an A wave here, a B wave here, and a C wave here. So what that would relate to at the end of the day would be having wave 4 over here. I would still need to see this move down here, and this move up here is an ABC pattern here. I would have to label it as an A wave here, C wave down here, and a B wave here, and then wave 5 up here. And that fits quite nicely because we've got 3 waves in here, so we can have either an expanded flat in this pattern, or just a regular flat pattern. But because it's taken the top out here by a little bit, it would need to be an expanded flat, and that means that this move down here would take this low out through here as this structure here. So we could have it like this, and we can also have it like this as well. I don't know. We're just going to have to wait for further evidence. What makes me think that we're in a bearish turn now is the FTSE. So with the FTSE here, this is the 4-hour chart, and just pick it up from where the AEX was as well. So wave 3 here, wave 4 here, and then we were looking for a move up here to take this high out here. It hasn't, it sort of has in a way, but it hasn't. So it's still that 7,600, so it's still lower here. But what I wanted to point out here is that from this, not that it needs to make a new high above 76, it just needs to have 5 waves in it. And with FTSE has been lagging a lot, the other markets. It has caught up at times, but it's got this habit of lagging. So we had this as wave 1 and 2 in here, then wave 1 and 2 and 1 and 2, and we got this trade here. But the main point here is we've been counting this 3rd wave up through to here and looking at it as wave 3 here in line with the other European markets, then wave 4 here, and then we're looking for wave 5 to make a new high above these guys here. And in this case here, this is the best fit. So wave 1, an A and a B and a C for wave 2, and then up for 3, back for 4, and up for 5 here. So if I can put that on the hourly chart here, it would look like this here. It kind of fits. It's just not a good fit, but there's some other important aspects here as well that I need to look at. So wave 1, an A and a B and a C for wave 2, and then 5 waves up for the 3rd wave, an A, B, C for the 4th, and then up for the 5th here. So it's all kind of fitting, and it fits well. There are errors within this, within the intraday count, but the main point here is that the distance that this is actually pulled back down through here. So if I take it, even if I took it from this low here to here, would be in the 50-60% box here, which is, you know, I mean, it's just an important acknowledgement here. I'll get around to that in a moment. So what we can look at here, once again, this move down through here is in 3 waves. So we've got 1, 2, and 3. So it can be an A and a B and a C back to the 50-60% retracement level, and then can move up from that point, okay? That's fine. But if this is a wave 4 here, if we get 1, 2, 3, some mucking around here for wave 4, and then wave 5 here, then because we got 5 waves in the direction of this trend here, then it's highly likely that we're going to get 3 waves back up and then down again from that point. Now, we could get reoccurring patterns here too. On the bullish side, we see that we've got an A wave and a B wave and a C wave here as an expanded flat with 5 waves in it, and it really came down, below its previous low here like this done. So this could be this whole pattern here could be a recurring pattern over here as well. So what I wanted to do with all of these markets that we've been talking about is to really wait for the evidence. This 5 waves down here is part of the evidence, and normally when we get a top in place, that would be enough, right? But I want to be extra cautious, and we will wait for this to unfold. If it gets 5 waves, then we'll work the retracement back up, and then we'll look for the short trades on this side, because it will come pounding down at this stage. If at any stage, this 7500 here becomes a retested resistance, then we'll be looking on the short side from that point there as well. There you have it. There's a possible top in the market. We're gathering the evidence. I don't have enough evidence, but when we do, then we'll look for the trade set up on the short side and look for those moves in the share CFDs and also in the indices. Alrighty, cheers.